We're very happy to have Dr. Osama Kanaan, who's the chief of mission at the IMF for the West Bank and Gaza. He has worked at the International Monetary Fund since 1993. He's the author of numerous publications which include articles on economics, particularly applied to countries in the Middle East, including the West Bank and Gaza, of course, and the peace process. He holds a PhD in economics from Yale University, and he will be presenting today a discussion on Palestine, the Israeli occupation, and the limits of the economy. So please join me in welcoming Dr. Kanaan.
I just saw a few people just grabbing the paper which I put out and leaving. So I'm usually very eager not to repeat what's in the paper. What I would like to do then for a change and to adopt a different approach from the one that's in the paper is really to answer questions that were asked to me over the past few days when people knew that I'll be talking about the Palestinian economy. I think the most frequent question was, well, all these Arab countries are now prone to having an awakening, the Arab Spring phenomenon that has affected so many Arab countries. How likely is it that this awakening will actually also affect or will take place in the West Bank and Gaza? So what I would like to do today is really to mold the presentation to be able to shed light on this question. And I would like to shed light on it from an economist perspective, because many of the factors that have contributed to the awakening, many of the factors have been economic, others have been political. The political factors have been very important. I would like here just to shed light on the economic factors, and I think the best way to do that is really to put myself in the shoes of an ordinary person in the West Bank and Gaza, and ask, what are the factors that would be particularly relevant or would actually be conducive to discontent, to an uprising. And I would like to start by just showing you one slide. I think, in the presentation I just want to focus on the implications of what we see here, which depicts the path of real GDP per capita of the West Bank and Gaza since the Oslo Accords. First, I think from an ordinary person's point of view, the real GDP per capita, which reflects the standard of living, is an important factor to be taken into consideration. I think that if you look at the most recent growth in the West Bank and Gaza since 2007, you will see that, as depicted here, that the growth rate in the West Bank has averaged about 7%. Real GDP per capita has averaged 7%. Very high rate of growth. In Gaza, there has been an important dip in real GDP per capita, but there has been a very important surge in growth after the blockade was eased, notably after the import restrictions on goods and services have been lifted. Restrictions have been lifted on mainly the inputs that actually go to consumer, what we call consumer goods, as well as to the inputs to the public investment program. So if we look at the recent performance, it's really indeed very impressive. However, I think, here in this graph, we take a longer term perspective and we ask what has happened since 1994. And here you see that the real GDP per capita in the West Bank and Gaza in 2011 in the West Bank has been only slightly greater than what has prevailed in 1994. So even though there's a surge in growth that is recent, really if you compare it with where we started from in the Oslo Accords, it is really a very modest increase. Now for Gaza, real GDP per capita has been well below the level in 1994. About 40%, today it is estimated at about 40% lower than what it used to be in 1994. So from the point of view of the ordinary person, what matters really is his standard of living, his or her standard of living. To what extent did it improve over the past, let's say, almost 20 years? I think this is an important question. The question of growth is important because it signals, it indicates the improvement of the living standards. But still, what's really crucial is the level. The level still is not that much higher than it used to be in 1994. Now, in many of the Arab countries that have experienced this awakening, the sort of long-run growth and the level of real GDP per capita has been really an important factor, I think, that has contributed to this content. There may have been recent growth, there may have been growth over the past 2, 3, 4 years, but still in the long run, if you look at if you take a long run perspective, the improvement in real GDP per capita has not been that substantial, especially when compared to countries in other regions of the world. So this is one indicator. I think it is important to then look at the long run perspective. Where did we start from? Where did we end up? Not only look at the past 3 or 4 years. I think another important factor is how widely this growth is distributed in the economy. That is, it's important to know the average. On average, if you just take the real GDP and you divide it by the number of people, is it high or low, and to what extent it grew in recent years. But it's important also to ask how widely shared it is. Now, if you look at the experience of the Arab countries that have experienced some awakening, you will see that there has been a disparity. First of all, geographic disparity. There are other disparities such as among social classes and so on. But an important one, for example, in Syria. In Syria, the uprising started in the rural areas. Rural areas that actually, even though we don't have any data, but that we suspect have not really benefited from overall growth as much as in other regions, let's say Damascus region or the Aleppo region. Now, I think the case of the West Bank and Gaza is enlightening because we have data separately for the West Bank and for Gaza. So these are two different regions, and we see here from the graph that Gaza, the real GDP per capita of Gaza since 1994 has declined to much greater extent than in the West Bank. And that is due to two factors. One is the blockade, the very tight blockade imposed on Gaza for a substantial period of time. And second, its separation from the West Bank. The fact that actually it's not linked to the West Bank in any way, and it does not have, consequence of the blockade, access to external market. It has a very small market, which makes really its access to outside markets, especially through exports of its goods, really important for its growth. So here, this is the first disparity. We see there's a disparity, regional disparity in the West Bank and Gaza between West Bank and Gaza. So growth has not been evenly distributed geographically, and we can see it clearly here by looking at the data for the West Bank and for Gaza. Now, what about within regions? Let's say, what about within the West Bank? Unfortunately, we do not have data on the distribution of growth within the West Bank. However, what we can say on a priori grounds is that there are certain factors that actually have made it more difficult for some regions to grow as fast as other regions. Very simple fact, 60% of the land of the West Bank is highly restricted for public investment and for private investment. That is 60% of the land of the West Bank, which is mostly the valley, Jordan Valley, cannot be accessed by the Palestinian public sector and the by Palestinian businesses, except with special permits from the government of Israel. So even though we do not have data on the extent to which those living in those areas, the Jordan Valley especially, have had their incomes rise or fall, or to what extent they're different from the West Bank overall. Nevertheless, on a priori grounds, we can say that since this 60%, this huge area has not been accessible to investors, and not been accessible to public investment from the Palestinian Authority, it is bound to have actually grown to a much lesser extent than other areas. Another important factor is really the separation of East Jerusalem from the rest of the West Bank. There are three factors that have contributed to growth in the West Bank overall. One is solid institution building, fast institution building by the Palestinian Authority, notably in public finance management reforms, the development of the Palestine Monetary Authority, and the reestablishment of security conditions in the West Bank that have really given confidence to the private sector, and that have bolstered private sector confidence and investment. The Palestinian Authority doesn't have a presence in East Jerusalem, so this factor, this important factor, has not affected East Jerusalem. East Jerusalem has not been able to benefit from it. The second factor that has contributed to the recent growth in the West Bank has been very large amounts of donor aid to the Palestinian Authority, both to finance the current budget as well as to finance development projects. And East Jerusalem has not benefited from that. There has been very little of that donor aid given to East Jerusalem. The third factor is the relaxation on movement within the West Bank and Gaza, the relaxation of restrictions on movement and access affecting the West Bank. Now, for those of you who recall, in 2006, there were very strict restrictions put by the government of Israel on the movement within the West Bank, and gradually these have been relaxed. There are still very important restrictions present, but still the relaxation, the easing during that period has contributed to growth in the West Bank. To a lesser extent than the other two factors that I just mentioned, institution building and donor aid, but still these have been significant factors. East Jerusalem, on the contrary, because of the building of the separation wall between the West Bank and East Jerusalem, has been more isolated from the West Bank. That is, the traditional market for East Jerusalem has been in the West Bank. That actually has been much less important, is much less important today than it was in 2007. So we can say, even though we do not have data that actually tell us to what extent East Jerusalem has grown in recent years, to what extent is it now better off or worse off than the rest of the West Bank, we can say that the factors that have driven growth in the West Bank have not been present in East Jerusalem. So here we have really likelihood of geographic disparity. First, between Gaza and the West Bank. Within the West Bank, disparity between Jordan Valley, East Jerusalem, and the rest of the West Bank. Now, in terms of the composition of that growth, what sectors did this growth benefit? If you look at 1994, about 20% of GDP came from industry, and about 13% of GDP came from agriculture. In 2011, the share of manufacturing fell from 20% to 10%, and the share of agriculture fell from about 13% to about 6%, more or less about half of the shares that used to prevail. And that's actually important because it tells you that the sectors that usually are the engine of growth and that are quite dynamic are now much less important. And why? Because what has happened since '94 is that restrictions on exports have actually increased tremendously. It's now much more difficult to export from the West Bank and Gaza today than it was in 1994. And so those sectors that depended on their growth on external markets are now playing a much less important role than they used to be. Again, this feeds into the economic disparity. To what extent are the fruits of growth widely shared? This has been an important factor we have seen in other Arab countries. It is bound to be an important factor in the West Bank and Gaza. Now, another interesting conclusion from this graph, as you see, is that really GDP per capita does not only have a downward trend for Gaza, and it's rising very sluggishly overall from '94 for the West Bank, but actually there are cyclical fluctuations. It goes up and down, and it goes up and down depending on the restrictions on movement and access, depending on the recurrence of the conflict. And so that's important because for the population, it is important to have some certainty, some kind of feeling of confidence that whatever gains are established today are going to last and are not going to be reversed. So here, if you look at the growth since 2007, it has been a steady growth. For Gaza, it's much later, it's since 2007. But if you look at then the longer run, the shaded area here that goes to 2014, you will see that what's really special about it is that the dips that you see in the past do not recur. If somebody just came from Mars and looked at this graph, you would say, but there's something here very interesting, is that since '94 you had ups and downs, and here you're assuming, when you're projecting, that it's going to go up. So what has changed since '94 in terms of the actual fundamentals that are driving this strange economy? And here what we can say is that there is a very high risk that we will see another dip. So if you look at the shaded areas, these are projections. There is a high risk that real GDP per capita will dip again in both the West Bank and in Gaza. And you can see that in the pessimistic scenario, and it could be the actual outcome could be even more pessimistic than what's here described as pessimistic. And so what are the factors that are really, what are the factors that could contribute to this dip over the next year or two? I think the one factor that is very important is donor aid. Donor aid has experienced very sharp shortfalls recently and delays. If you look at the aid given to the Palestinian Authority, its magnitude has diminished both in dollar terms and as a share of GDP, because the PA itself has become much more effective, much more efficient in using its expenditures. The aid has gone down from $1.8 billion in 2008, $1.8 billion to about $1 billion today for the year as a whole. So this really reflects the Palestinian Authority's own strengthening of the public expenditure management framework. It has established a social safety net so that those who are really truly needy get the money, as opposed to having the social transfers go to those who do not need them. Electricity subsidies are being phased out. Overall, all the non-priority spending has diminished substantially. So there has been progress that is attributed really to the more efficient expenditure management of the PA. But however, there's also, and especially in recent months, there has been shortfalls. There have been shortfalls and delays in the disbursement of that money, so that the PA has had to compress expenditures beyond what would be viewed as prudent. It's important to actually be more efficient and reduce expenditures, but it has to be based on a reasonable budget. It has to be based on an orderly process. Now, the aid recently has been much less than budgeted, which has actually both disrupted some of the functions of the PA, but also it's reflected in the growth. The growth actually doesn't have the same stimulus as in the past from donor aid. Second, the restrictions on movement and access by Israel, which have started to be relaxed, the pace of this relaxation has diminished considerably. So there's no more impetus from this easing of restrictions. In the case of Gaza, we have seen in 2010 the restrictions on the import of consumer goods and of goods that go to public investment projects have been lifted. There have not been any further relaxation in 2011. And so this is the second. The two actually important, the important contributors to growth: institution building, donor aid, restriction of movement and access, are now no longer present to the same extent. There is also right now an important factor that actually is contributing to the uncertainty in the West Bank and Gaza, which is the delays in the transfer of clearance revenue. 2/3 of the revenue of the Palestinian Authority is collected by the government of Israel on behalf of the PA and transferred to the PA. We have seen in May a delay of by about 2 weeks in the transfer of these revenue to the PA, which has actually delayed the payment of wages and salaries. We have had the recurrence of this in recent days, whereby the clearance revenue transfer has been delayed, and we hope that it will be transferred soon. But it poses a big question mark to the private sector. How viable this Palestinian Authority is? Is this government really viable? If 2/3 of its revenue is collected by Israel and is subjected to this political uncertainty, how can we rely on the Palestinian Authority, for example, to pay not only its wage bill, but its obligations to the private sector? Private sector delivers goods and services to the Palestinian Authority. And the Palestinian Authority has been accumulated important arrears, domestic payment arrears. It has not been able to pay on time its obligations to the private sector. And this tendency has actually been exacerbated by this delay in the transfer of clearance revenue. So all these factors actually are posing serious risks to this upward trend that is projected here. And so for the ordinary person looking at the next 1 or 2 years and seeing, where this economy came from, where this standard of living came from, what it is today, what are the risks, I think these factors are posing serious risks to this ordinary person's outlook, to his prospects for employment. One important indicator here of the extent to which growth has been fairly distributed is the unemployment rate. The unemployment rate really declined very little. In the West Bank, it declined from 18% in 2007 to 15% in 2011. So there has been a decline, but it's very modest. In Gaza, it declined from 28% unemployment rate in 2007 to about 26% in 2011. So there has been really a positive movement. However, with these factors I just mentioned, the likelihood of this unemployment rising again is very high. And that we have seen in several of the Arab countries that have experienced the awakening. Unemployment is very important. Youth unemployment is very high. Youth unemployment of those who are 30 years of age or below. In the West, in Gaza, it is 40% unemployment. In the West Bank, it's 25%. So this is another indicator that is important to take into account when looking at the likelihood that actually we will see deterioration in the economic outlook. I would like to say also a few words about institution building. I think for many of the Arab countries that have experienced an uprising, an important factor has been, how well are the public finances managed, and how transparent are they? In the case of the Palestinian Authority, it was clear that the management has been very efficient. It has actually implemented many of the best international practice with regard to first making sure that subsidies are targeted to the truly needy, as I just mentioned, by having a social safety net that protects the vulnerable groups, and also by making sure that the average person has full access to the accounts of the Palestinian Authority, the public finance accounts. The data on revenues and expenditures, you can find, any person could go to the internet and see what has been spent exactly in what areas every month on the internet, the sources of revenues, and that's done on the 15th of each month after the end of the month. So today you can look at the data of October, expenditures, revenues, finance, how much money came from abroad. This transparency, the lack of transparency in the other Arab countries has been an important factor behind the discontent. In the case of the Authority, this factor does not exist. Transparency, how well the money is used. I think this institutional factor has been an important factor that I think would be taken into account by the average Palestinian. Then how well is the financial sector being supervised and regulated? The Palestinian Monetary Authority has actually developed its capacity and has proven itself to be capable of regulating, supervising the commercial banks in an effective manner, and has actually made sure that there is a level playing field among different borrowers. Those who have special relations to the establishment do not have any preferential treatment. So this is an important factor. The institutional building is an important factor. With regard, the level playing field, the strength of the institutions, the extent of corruption, I think these are positive factors. However, what we see today is that because the public finance management system does not have the resources necessary, for example, if donor aid continues to fall well short of budgeted amounts, if the clearance revenue does not come in, then these institutions, even though they're strong, they're not able to really to perform to their full potential. Same thing with the Palestinian Monetary Authority. It may have the capability and it may actually have the competence to supervise, and it has demonstrated that. However, if the private sector is not growing, then there's really not much to supervise as we move along, and as we actually try to see the extent to which the borrowers are benefiting from this institutional development. With regard also to the extent to which some parts of the private sector are benefiting more than others from access to the establishment, I think one important factor, which is not usually mentioned, but I would like to actually highlight it here, is that restrictions, removal, and access don't only have a direct adverse impact on the economy, but really by its nature, it creates an uneven playing field, whereby those who have special connections to the establishment are more likely to get these permits to access the Jordan Valley, 60% of the land I just mentioned a few minutes ago, permits to actually export to Israel, permits to obtain these special business licenses to be able to deal with Israel. So that's actually an important factor that's creating discontent. Restrictions are there, people are the ordinary people are not able to access markets as easily as before, but also there's a phenomenon of favoritism, some groups being favored more than others. That's an important factor in some of the other Arab countries that actually contributed to discontent. There is some parts of the private sector had access to the establishment, had favors given to them. That's an important factor to be taken into consideration. So, we see important risks arising. I try to actually give you a view of the factors that have been relevant in other Arab countries and that have likely contributed to discontent. And I think, the unless we see movement on two main fronts: one, the relaxation of restriction movement and access; second, donor aid that is adequate and timely; and measures to enable the strong institutions of the PA to actually continue to contribute to confidence and to growth. Unless we have these factors properly addressed, I think the outlook over the next year or so may not be that positive. So I'm open to discussions. I think we can discuss the evolution of the economy since '94, in the question and answer session, or any other questions that relate to this issue of the spread of the Arab awakening. Thank you.
My name is Antonio Cafoncelli. I'm a retired physician. I would like to ask you if you're willing to share this graphics with members of Congress. They're trying to restrict the aid to Palestine and Palestinians. This graphics, you cannot divorce, in my judgment, the macroeconomics of the growth or the capita growth from the political context. These are the graphics of an occupied country, a complete occupied country, and they reflect the, and this is my judgment, I don't quote anybody, this is the slow ethnical cleansing and the slow genocide, in my judgment, that is taking place because it's a way to destroy society. In other words, what you are showing, basically, if you don't say what happens with the West Bank and Gaza, it's not the fault of the Palestinians. It's because of the occupation. So this is the main thrust of what I get from your conference. And coming back to the original question, are you willing to show and to share this with the members of Congress that they don't know what's going on and they are restricting the aid to the Palestinians, particularly the donor aid, and they are destroying the society? Thank you.
Thank you.
Yes. One thing which I would like to emphasize here is that there is some reason for optimism, and there are some factors that really lead me to believe that we do not have to have another deterioration in the economic conditions in the West Bank, Gaza, which is if you look at the cooperation between the government of Israel and the Palestinian Authority, at the technical level, it has been very positive. So let's say, if you look at the cooperation between the Ministry of Finance of Israel and the Ministry of Finance of the Palestinian Authority, they have actually agreed on measures to improve revenue collection, to share revenue in an efficient manner, to improve tax administration that can benefit both economies. Same thing with regard to the cooperation between the Central Bank of Israel and the Palestinian Monetary Authority. At the technical level, and actually in the case of the Central Bank, at the even policy level, the cooperation has been excellent. So there is really potential for good cooperation. The problem is really at the political level. There's when the decisions go up and are affected by political considerations, then I'm much more pessimistic. And so what we can say is that if on the political side, in terms of the peace process, if the peace process moves forward, then at least we have the fundamentals. We have institutions on the Palestinian side that are quite strong, that have demonstrated an ability to deal with Israel at the technical level, on an equal basis, the technical level, not political level. Of course, on the political level, there are huge disparities. On the technical level, it has shown competence and ability. The two sides have shown competence, ability, and willingness to cooperate. So I would like just to highlight some of the positive factors that actually could affect the outlook. I agree with you that actually this long-run perspective is important actually to appreciate by members of Congress, by the international community, by international organizations, and all this is in the IMF website. If you go to www.imf.org/WBG, I think we will have a memo on that.
Making the report available.
I think this long-run perspective is there, and also you have a very thorough analysis of the factors that have contributed to this picture, and I think that it's true that the emphasis has been really mostly on what has happened in the past 3 or 4 years, rather than, where do we stand now compared to 20 years ago. Thank you. Sorry.
It's okay. Go ahead. Right here. Thank you very much. I'm Benjamin Tua. My question has to do with the access of the Palestinians and their ability to control their resources, and it has 2 parts. The first concerns the transfer or clearance revenues. And could you provide some detail of what they consist of, and would there be a way that the Palestinians could gain control of those 2/3 of their transfer clearance revenues if they do not have control of now? And the second concerns the Jordan Valley. You mentioned that some Palestinians can get access to the Jordan Valley, and what do they get out of that access? Is there economic activity, Palestinian economic activity going on in the Jordan Valley that enables them to get some benefit?
Yeah. I think with regard to the sources of revenue, the clearance revenue, because the West Bank and Gaza as an economy is very small, it's really dependent on trade. Because it does not have direct access to markets other than Israel, except Jordan, but it doesn't have a seaport or airport to have direct access to Europe, to the US, to other countries. It's really dependent to a large extent on trade with Israel. So most of 2/3 of its revenue come as a result of this trade relationship with Israel, either direct trade with Israel or trade with other countries through Israel, which puts it in a position of actually relying on this what we call clearance revenue, on collection by Israel. So Israel actually collects these taxes on behalf of the PA, which represent 2/3 of total budget revenue, and transfers it to the PA. The Paris Protocol that was established and that was signed in the early 90s, about the same time as the Oslo Accords, stipulates that Israel has to actually collect those revenues and transfer them on a timely basis to the PA. This is part of the agreement, and also it is actually in line with international practice and international law. And so these delays are not consistent with that agreement. And now the question which you may ask, well, what about the domestic taxes collected by the PA? I think the domestic tax collected by the PA are also dependent on measures that Israel could take in removing restrictions on the private sector. Because private sector is still not as developed as it should be. That is, the private sector as an engine of growth is still quite inhibited, despite progress in recent years. And so until you have an expansion of external trade that allows this private sector to expand, that allows domestically collected taxes to rise as a share of total revenue, you will continue to have this dependence on clearance revenue. With regard to the restrictions on 60% of the land, which is 60% on what's called Area C, this is a region that includes much of the agriculture of the West Bank. That includes those who are dependent on agriculture, and therefore those who have lower, the farmers, the peasants, who have lower incomes than in the rest of the country. And so those who are most in need of investment, be it by the private sector or be it by the Palestinian Authority. So it's really an important part of the country, both because it's first of all, it's such a huge part of the land, because it actually includes much of the agricultural area of the land, but also because of the population there that are the people who live there, who are much more isolated, who actually are affected by poverty much more than in other areas. Those who are most in need of investment.
And what percentage of the population would that be, the Palestinian population?
I will have to actually give you the. I don't have the figures with me, but yeah, it may not be as high as, let's say, the urban areas, because what you have seen is people who used to live there in the Jordan Valley. You had a movement towards the urban areas. So it has been an area that has been, in a way, neglected historically, and especially after this restriction, after '94, in which this area has been basically isolated, has been designated as an area that is sensitive from a security standpoint, that it did not see the same growth in terms of population growth as other areas. But nevertheless, we have seen in countries that had populations, for example in Syria, population is concentrated in Damascus and Aleppo, and yet those who are in villages, those who are isolated, even though their population is relatively small, nevertheless it has been an important factor in feeding discontent. Those who are they may not be as numerous or may not, but are more isolated and suffer much more. I think these have to really be taken into consideration, and their plight has to be given importance. Thank you.
Just one moment, wait for the microphone.
The question, I have actually quite a few questions as a journalist and video maker who's been living and working in the West Bank and Gaza for quite a number of years. But one thing that's puzzling to me, and whether you can shed some light on two areas, and these two questions are connected, but they're two separate questions. The first question is, in 2010, early 2010, if I get the date right, there was a donors conference that was held with a number of international countries pledging quite substantial amounts of money for the rebuilding of Gaza and to a certain extent of the West Bank. But very little of that money, from what I understand, has been transferred or spent. So I was wondering whether you could speculate on, or not speculate, but give us your position of the IMF
Yeah.
in regard to those funds, and where they stand, and whether there still will at some point be available, and whether they're in any bank accounts. And then the other question I have really is that in much of your presentation you use the word West Bank and Gaza almost simultaneously as one entity, but in point of fact we all know that each day the two entities are becoming much more separated politically and economically. So I was wondering whether you could comment on how the IMF views economic growth in Gaza compared to the West Bank, not so much in terms of academic figures, but economic figures, but in practical terms of how that growth can happen in light of the severe restrictions that are placed on Gaza.
Okay.
I hope both of those made questions.
I think with regard to the donor aid, if you compare the experience of the West Bank and Gaza, recent experience, in terms of pledging and disbursements with that of other countries, you will see that there's really, there's no framework in which pledges are made and the disbursements are tracked. And this is due primarily to the fact that disbursements are affected by political considerations. No country, very few countries, except the European Union, the bloc of the European Union, but countries like the United States, countries like the Arab countries, for example, I think there is a reluctance to pledge in the sense of giving some degree of certainty with regard to the amount and the time of disbursement. What you have are indications by countries that, this is roughly the amount that could be expected. This is an important, I think, source of uncertainty. I think what the international institutions, international organizations are trying to establish is a framework in which there are actually firm pledges. Of course, we have to, the donor countries themselves have to be convinced that this is the correct approach, that they actually have to be bound by almost by agreement to disburse, and not to leave it to political vagaries. So, some countries are not willing to do that. They're going to say, well, we're not going to actually promise you anything unless we see A, B, and C on the political front. On the question with regard to Gaza and the West Bank, I think it's Gaza and the West Bank are, as I suggested during my presentation, are two regions that are really separated and are unlikely to be actually integrated anytime soon, for obvious reasons. To have a safe passage between Gaza and the West Bank is not likely to be established. That really would allow these two economies to be integrated on the economic front. Of course, there's also the political factor, which relates to the fact that the PA only has full control of the West Bank. Hamas has control of Gaza. I think it's important to have a unified front, to have some agreement on the political front that would allow the PA to have its government in all areas of the Palestinian territories. This is an important factor that obviously affects the economic performance of Gaza. But given that Gaza is so small, such a small economy, and given its reliance on external trade, and we can see from the empirical evidence that economies that are so small, or regions that are as small as Gaza, would depend for their growth mostly on their access to outside markets. And so this is why you have seen, once the government of Israel relaxed its restrictions on the import of consumer goods and public investment goods, you have seen the growth in Gaza surge by about 15%. And so giving the Gazans access to outside markets for their exports. Now, exports are not allowed to go out of Gaza, with the exception of very few, very limited amounts. if you give this access to Gaza, you will see the growth rate in Gaza go up by as much as 20-30%. And so, to answer your question, in the short run, let's say over the coming year, really there are some steps that can be taken that would improve living standards of the Gazans tremendously. But beyond that, of course, if you're looking at the very long run, then you also need to have the integration of the two economies and also a political solution to this division between Hamas and the PA.
This is a short follow-up. Can the IMF and the World Bank do anything to aid in the process of economic reconciliation between the two governments? It seems politically they're very far apart, but they do have interests economically. Is there anything that your organization is doing?
Yeah, I think as an organization that really is focusing on economic issues, economic analysis, economic recommendations, I think the best it can do is really to analyze and highlight the factors that are actually constraining growth in the West Bank and Gaza, and and to identify the measures, the economic measures that could be taken that would benefit both sides, Israel and the Israelis and the Palestinians, while having a minimal impact on issues like security. I think this understanding of what are the factors, where is this economy going, where is it likely to go, what are the risks of actually not having economic opportunities and economic progress. This I think is the best contribution that institutions like the IMF could make. Thank you.
Before we get to another question, we've got a question that comes to us from one of our online viewers via Facebook. And that question, this may be a difficult estimation to give, but what is the percentage of Palestinian GNP, is written here, that is lost to Israeli land seizures, destruction of land, etc.? I guess maybe a way of rephrasing this is, what could the Palestinian economy look like had it not been for these restrictions and particularly destructive measures like land seizures and so on?
Yeah. Well, it is. If you look at this graph, what is really very clear is that the reduction in real GDP per capita through time is very strongly linked to the extent of restrictions on movement and access. And what you can see is that the fluctuations have been such that really by 2009 or so, real GDP per capita is back where it started in '94. Now, there are obviously other factors that affect growth, but for the Palestinian economy, whose market is so small and so dependent on both external trade and internal movement, definitely the restriction of movement and access, you can say, have been a primary determinant of the level of real GDP per capita. So here the question then is, well, had you not had these restrictions of movement and access, where would we have ended up? And this is actually addressed in detail in the paper which you have, which has been distributed and which is on the internet and our website, that my team has actually just produced in September. It actually shows that the real GDP per capita would be twice as large, as much as twice as large today than it would have been had there been no twice as large today than it is actually prevalent today. That is, had we not had restriction movement access, the real GDP per capita would be twice as it is today. And we have different scenarios basically that actually depend on what kind of model they use. But what is certain is that the real GDP per capita that we started with would be much larger today than actually you see on that graph, had there been no restricted movement and access. In terms of the performance of Gaza, you can see that clearly by the dotted line here in 2010 that shows that real GDP per capita is 40% lower than the level that prevailed in 1994. So it gives you kind of an indication of how repressed the Palestinian economy is, and the relaxation of restrictions today, the relaxation both in terms of the removal of the blockade and removal of restrictions within the West Bank would lead to very rapid growth, and as you see here, by as much as 7% in the West Bank and Gaza together. If the current restrictions remain, then you are bound to have a decline in real GDP per capita, and you're bound to have sort of a return to the levels that actually prevailed 20 years ago, even in the West Bank.
Thank you. We've got time for one last question. We'll go right here. If you could keep it brief so that we can get it quickly.
This will be really brief. I'd like to ask you a broader question if I can. Lucas Zeller, CNSnews.com. My question is this: do you believe Israel has a right to exist?
Of course, this is. Is this a question as you mean IMF or to the IMF or to the? Of course, all parties recognize Israel as a state that has the right to exist. The PA recognizes it. IMF recognizes it. This is a question that has been actually addressed a long time ago and solved a long time ago. So now, all the parties that are now in discussion fully recognize Israel, the state of Israel. As I said, the relations between the PA and Israel are relationships at the technical level that are very smooth, very normal. So I think the questions now are, you have gone beyond the question of recognition of Israel to one where what to do with such issues, what to do with settlements, and whether settlements should be spread in the West Bank, or whether settlements should be discontinued, whether East Jerusalem should be part of the Palestinian state. Of course, the international community recognizes East Jerusalem and Jerusalem overall as occupied territory. So there are all these very detailed questions that need to be addressed today for the peace process to continue. But in terms of very basic issues that have been resolved in the Oslo Accords and have been repeated by all sides, these were way beyond that. And so today, really, we need to, what I think on the political front, what needs to be addressed are the issues that have been put forth or left unresolved, really, over the past few years, and that many of the players like the US and the EU are trying to push both sides to come and resolve.
Okay, the question that I have is, first of all, can you go into a little more detail about what the restrictions on the private sector, development of the private sector in either the West Bank or Gaza consist of? Go into a few more details about what they entail. And secondly, can you tell us how that relates to the situation of acute labor dependency in the West Bank and Gaza on the Israeli economy, on finding jobs within Israel, which has been further restricted by the imposition of the wall? And thirdly, can you talk about the relationship of the water situation that the water grab that the settlements are taking up in relation to the economy of, well, both the West Bank and Gaza?
Thank you.
Okay, just very briefly, the restrictions on movement and access. In Gaza, the restrictions are on, first, exports of goods. Gazans are not allowed to export goods to Israel or the rest of the world. So this is one. Second, the restrictions on the imports of construction goods and other material needed for the private sector of Gaza. So these are the two restrictions present. In the West Bank, the restrictions are on internal movement. There are some obstacles that actually make it costly to move within the West Bank. There are restrictions on access to what's called Area C. Investors, private sector investors, and public sector and the public sector cannot invest except with special permits. And there are impediments to actually access to the Israeli market. And those who live in the West Bank, in the West Bank, cannot actually go to Israel except with a special permit, either a permit that is temporary or what is called business people's permit. Now, of course, there are other restrictions that affect economic development. But I would say that really, if you address those restrictions, those obstacles, even over the next year, that would be a big achievement, and that would lead to a big impetus to growth. Thank you. The water, obviously, as I said, the agricultural sector has in the West Bank has shrunk considerably. There are as part of the Oslo Accord, special arrangements whereby the decisions on water have to be made by the Palestinians and the Israelis together. But a lot of the provisions of the Oslo Accords are yet to be implemented. I would talk to you in detail about the fairness of distribution of water, the fact that perhaps settlements are taking a disproportionate share of water. But these are issues that go beyond, I think, what we have covered in our report, because they are more of a political nature. But what I can say is that water is an important constraint. The access to water in the West Bank is an important constraint to development there.
Dr. Kanaan, thank you very much.